keep this recording. So I want to remind you that this Thursday, tomorrow at 7:30, we have a review session for our Monday exam. We'll also have review sessions at 9:30 and 11:30 on Friday, obviously during the regular class time. You can come to one or all, but come with questions. This is going to be for you to make it kind of questions or needs you have of things that are unclear. I could go through chapters 1 through 4, but probably not in an hour. But I can cover specific topics of areas or need of confusion that you want to find more about. So we're going to have those review sessions, as I said, 7:30 tomorrow and 9:30, 11:30 on Friday. Exam will be on Monday. Additionally, today we do have a quiz, and that quiz for today will be done either at noon or by midnight tonight. So we're going to have you make sure that you have access to that quiz. It's a 10-question quiz. You'll have a half hour to cover it. And then we'll also be able to review that on Friday. But I do want you to take out your annual reports, and let's go into those right now. I'm going to take an example. I've got a Kellogg's annual report in front of me right now. I'm going to ask that you take out your annual report and find note 1. The notes are in the back of the annual report. I see note 13 here. I see note 9. I scan back. I get to note 5. And I get to note 1. My note 1 is titled Accounting Policies, Basis of Presentation, Use of Estimates. I'm going to ask that you fold down the corner. Take the corner. Actually, if I turn off my video, I think you'll be able to see my book a little better. So I'm going to take off to video settings, background, and turn that off. Okay. So what happens is we get to note 1, which is my notes to consolidated financial statements, and I'm going to fold down the corner of the page. Why do I fold down the corner of the page? Well, that is where your financial statements end. We'll end on the note. So if I fold that down, the page right before this says consolidated statement of cash flow. The page right before that is consolidated statement of equity and retained earnings. The statement before that is consolidated balance sheet. And the statement before that is consolidated statement of comprehensive income. And one more, consolidated statement of income. Now you might have a little bit of variation on the names. You might have a statement of operations instead of a statement of income, or an income statement, or a statement of profit and loss. So with that in mind, we're going to have these statements you're going to work from. And today you're going to do some calculations. You're actually going to use these reports, and we're going to make some calculations. So I want to make you find note 1, find the financials, and then we're going to divide out into breakout rooms. I'm going to calculate 4 things. I'll put those 4 things in the chat of what I'm looking for. All right, we've got 10 of you here, so we'll break out into 4 groups in a minute. So in the chat, I'm going to go ahead and ask 4 questions. 1, I'm going to ask you to calculate gross profit percentage. You might remember that you take your net sales minus cost of goods sold and divide that out and come up with a percentage. I'm also going to ask you to come up with a net income percentage. Also from your income statement. You're going to take your net income, your bottom line, all right above earnings per share, there's a bottom line number, divide that by net sales. I'm going to ask for a current ratio. And that current ratio is going to be current assets over current liabilities. It'll be a number, 1.1, 1.2, 0.87, whatever it might be. And the last, I'm going to ask for a quick ratio, also known as an acid test ratio, which instead of all your current assets over current liabilities, it's just your quick assets. Basically cash and receivables. Cash, cash equivalents, receivables, not inventory, not prepays, not other current assets. Then you're gonna have to manually calculate that. So let me give you an idea of how to do that. I'll just use this one right here. This is 2019 Kellogg's annual report. I fold down the page. I go back all the way to the income statement, what they call the consolidated statement of income. By the way, I've got another annual report here. What they call their income statement is the consolidated statement of operations and comprehensive income. So it's got a different name, but starts with net sales, or it can start with revenues. Has cost of sales or cost of goods sold. Gives you gross profit, a gross margin. Selling and administrative. So this is another example. I will warn you, you might only be able to calculate 3 of these ratios. What do you mean? Well, every company's gonna have profit. Every company's gonna have current assets and current liabilities. They may not have a cost of goods sold. If you're a restaurant or an airlines or a hotel group or a radio station, you're not selling, you're selling ads, but that's not a product that you have a cost of goods sold associated. You're not selling your airplanes. We talked about that. You're not selling rooms, you're renting rooms in a hotel. See, if you don't have cost of goods sold, you don't have a gross profit. If you don't have a gross profit, you can't calculate a gross profit percentage. So don't worry about that. A bank, they sell money. Well, their cost of goods sold is not money. So banks and finance companies don't have a cost of goods sold. So don't worry about that. When we do receivable turnover and receivables ratios, we might find eventually some companies don't have receivables. And as I said, some companies don't have inventory, so we can't do inventory turns. Those are things that we may not be able to do with all companies, but for most part, we're going to do them here. So let's go ahead and look at our income statement. I'm just going to give you some ballparks. I'm reading my net sales of 13,578. I've got a cost of goods sold, 9 billion. I got a selling general administration of 3 billion. I've got an operating profit of 1.4 billion. And I look at that and I say, wait a minute, where's my gross profit? It doesn't say gross profit. It gives me net sales. It gives me cost of goods sold. I have to manually calculate gross profit. I take one of the 9 billion from the 13.6 billion. I come up with about 4 billion. So 4 billion out of 13 billion, that might be 20 odd percent, say 24%, 25, whatever it might be. Just a ballpark. I'm ballparking it right now. Don't worry about it. You've got a calculator and I'm going to ask you to use it. So I can calculate a gross profit percentage, but I have to manually calculate my gross profit and then divide by net sales. But I am given a net income. Bottom line, $960 million. So about $1 million out of 13.5 million. Okay. I look at that and I say, oh, based on that, I probably got 6-7% roughly of net income percentage. So I said 20 odd percent, 6-7%. Those are my two numbers for my income statement for gross profit percentage, net income percent. Then I'm going to ask consolidated balance sheet. And what do they call it here? For Big Lots, their balance sheet is called consolidated balance sheet. Okay. I look at that and they were pretty nice to me. They said total current assets, 3.4 billion. Total current liabilities, 4.8 billion. Oh, well, I can divide 3.4 by 4.8 and come out with about 0.75, 0.8. That's my current ratio. But now when I ask you for the acid test or quick ratio, you say, okay, quick ratio is the stuff that can be turned to cash pretty quick. So cash, yep, cash equivalents, that makes sense. How about inventory? Well, that's usually 60 to 90 to 120 days to convert, so that can't include that. Prepaid insurance, no, that lasts for a year, and I don't want to use that one. Other prepaids, other current assets. How about accounts receivable? Yeah, I guess I'd include accounts receivable. So cash equivalent, and receivables are what you included. So I look here, I got cash and cash equivalents. I've got accounts receivable. I've got inventory. I've got other current assets for total current assets of 3.4 billion. Well, I'm going to take away two of those numbers. I'm not going to include inventories. I'm not going to include other current assets. I'm going to go in and say cash and cash equivalents and accounts receivable. Only those two numbers are my quick assets. That's what will be in the numerator for my current ratio. Then I take, so that's roughly 2 billion, and I divide that by total current liabilities of 4.8 billion. So I'm less than maybe 0.4. Okay. So 0.4 versus 0.8. That is the ratio banks will use to evaluate. They won't use the current ratio. They will more often use the quick or asset test ratio because they want to go in and see, I don't know what your inventory is worth. Is it worthless? Is it broken? Is it old? I don't even want to mess with it. I will look at the highly liquid stuff. I'll look at the cash equivalents, and receivables should be pretty good. So that's where we have to make a calculation. Same way here, I had to calculate gross profit manually. You're going to have to calculate current assets will be there. With quick assets, you'll have to calculate manually too. Are we on the same page so far? So what I'm going to do is I'm going to divide you into groups right now. Okay, we've got 11 of you, and in those groups, each one of you is going to pick a company. Now, one or two of you may not have your annual reports for whatever reason. I see a bunch that are still here in the classroom. But I'm going to ask that you go ahead, and if you don't have an annual report, get the data from one of your classmates that might have a second annual report that can share with you. And I'm going to ask you to bring these annual reports with you and have them. If you don't have yours, there's plenty here to come by and pick up in the class. So by all means, grab some, come on by. I'm going to add some more to it today before I go home. So if you want some additional annual reports to hang out, to check out, to participate in, go for it. I'm going to get you in your groups. You're going to make those calculations. You're going to work together to do that. I'm going to ask you that by Friday, come up with a sheet of paper, actually a spreadsheet, from one spreadsheet from your group, with each member telling me what company and those 3 or 4 numbers you've calculated. But each one of you should be doing it on your own. Submit that for Friday morning. We'll start that with our review process for our review sessions. Again, 7:30 Thursday night, 9:30 or 11:30 Friday morning for our exam on Monday. Monday will be through Connect. It will probably be outside the class time. I was asked, is it going to be open book? And the short answer is yes. Now, before you start cheering that it's an open book exam, you won't have time to open your book. What do you mean? Well, it'll be open book, open notes, but I'll tell you, if you have to read through the book to answer the questions, you're going to run out of time. It is a timed exam, and it will be tight. I'll probably be scaling the exam, by the way. You probably will run out of time. That's by design. I don't want to mess around with some of those other tools to verify no one's cheating, no one's stealing, no one's talking, no one's communicating. I want you to be able to do your exam, so you're going to have to come prepared on Monday to not use your books. It's a crutch. You'll be able to fall back if you have to, and if you have some time or something that you, wait a minute, I know exactly where to go. Great, I've been studying this stuff and I know where it's at. That might be helpful. But again, I want you to understand and internalize what you've been learning, what we've been talking about, so that you will be able to cover this material. And when you get a question, you'll say, okay, what's the gross profit percentage? Let me see, do I go to okay, I have to go to my income statement, and okay, I've got my multi-step income statement. This is how we did it in class. You don't want to go through that whole process. You want to say gross profit, revenues, net sales, net revenues, whatever it's called, depending on the income statement, minus cost of goods sold is gross profit. Great, I've got my gross profit. I divide that by my net sales, and that's my percentage of my gross profit. Okay, we can talk about it and do it in 10 seconds, or you can look on it, a paper, and try to look in your book and cover 2-3 minutes trying to do that. You take 2 or 3 minutes, you lose. I don't want you to lose, I want you to win. So I want you to come prepared and be aware that prepare like it's not open book or open notes, because that's the way you will maximize your benefit, the effect, and success on this exam. Any questions on that?
So will our exam be multiple choice questions and filling out income statements and stuff like that, or how is it going out?
Good question. The exam will be in Connect. It will have multiple choice similar to the quizzes, but it'll also have some fill-ins like on your homework assignments. So maybe some journal entries or some calculations. You might have to type in some numbers. So it may not all be multiple choice. But there'll be a bunch of multiple choice. So, and you should be very comfortable by now with the quizzes and where that stands. Good question, thank you. Other comments or questions? All right, I am recording this. Someone is not hearing any of this. This is being recorded, has a terrible connection. This will be posted. But again, get in your groups and by Friday, submit a spreadsheet and present it in class. We're going to have you come together and take a look at that. Okay. Other comments or questions? All right, so let's go ahead. I'm going to divide you into 4 groups. So you'll have basically 3 apiece. One of you will have 2. And take it away with, I'm just going to stop the recording here and we'll go forward.